Hey guys, this is Market Update. I'm really positive for 2025. I think there's two things. The first is specifically for crypto, some rulemaking, some legislation that is positive for the industry. I think that just is a tailwind. The other side is I think the dollar weakens and I think the market is not pricing in enough rate cuts. And so I think, again, that's positive and a tailwind for risk asset prices and crypto prices. I'll go through that in this video. Look, we're not really in a drawdown. You can't say it is because within 13, 14 weeks, the price of Bitcoin doubled, right? Which is insane. And so you're now, 10% away from the all-time highest price ever traded. I just can't see that as a drawdown. I know people are kind of a little bit worried or maybe there's some uncertainty. I don't see it personally. It's actually good to look at on-chain data for this. This is Checkmate here. The website is Check On Chain. You can go and see that. I'll link it down in the description. Awesome on-chain data. This is short-term holders right here in red. You can see right here around the 86 level is a level to test. So of these short-term holders, some of them are going to be long-term investors and they'll become long-term holders as they hold. But some will be short-term traders, breakout traders that want to make a quick buck, and maybe you have to test them and say who's got the fortitude, right, to actually stay in the position. Went down and tested that around at 88 level here. Bounced pretty much the whole candle back. So, we're still in this consolidation range. This isn't even a drawdown. I wish it will go lower because honestly, I think the market's mispricing a lot of stuff right now. And I just think this is a great, any weakness, right? Any weakness in the world's best asset you want to trade. If you do trade, Bybit deposit bonus down below. If you are a new user, you can get up to 30,000 as a deposit bonus if you follow that link. And then Apex, which is Bybit's DEX. A lot of people can't trade on Bybit. This is Bybit's DEX. You can connect your wallet and trade on here. You get a permanent fee discount by the link below as well. I want to focus on the fundamentals that can drive price in 2025. I can break it down into three areas. One is network adoption. Then you've got macro. So dollar strength, dollar weakness, interest rates, and then specific policy for crypto. All three of these I think are great for this year, barring any unknown event that may happen. So Bitcoin hash rate, look at the difference. So this was a previous all-time high in the last bull market down here. We're literally orders of magnitude higher than that now. This is insane. This just shows that people are willing to invest in infrastructure, mining equipment, etc., to mine this network. Just a massive adoption of the network. Which is absolutely positive. There's no questions about it anymore. Look at the hash rate. It's literally insane. ETFs, best performing ETFs, best performing large scale asset. It's all there. There are no questions about the network adoption anymore. Coming to macro, this is MVRV, which shows momentum of prices throughout cycles. And so really, I start to get a little bit worried and a little bit bearish when MVRV spikes around this 4 level. And you can see in previous bull markets, one here, and then one here, MVRV starts to spike up. That's where basically prices are overdone, right, in relation to kind of the longer term trend. Look, we're in a big bull market. We're in an upswing. We have really good momentum, but we're nowhere near a topping out level. You can see it is coming down. So this was 8, 5.5, 4.5, kind of 4. So maybe we get to 3.5, something like this. But this seems like a kind of mid-cycle pattern rather than a cycle top pattern. So yeah, I think it's just very good news as well because I think we have a long way to go. Now, sticking on macro, this is from Julian Patel here. The market is pricing in right now 25 basis points of interest rate cuts. And I just don't think that's enough. I think it's more than that. And I think the Fed in December, they chose to take a pause. They wanted to, shake markets out a little bit. In 2024, look, a lot of inflation was created, right? A lot of stimulus from the government. You had an election where they want markets to be at all-time highs, and then they drew it down after that. So we draw down, we shake a few people out, and then we go again. 25 basis points, I just don't think that's enough. And I think that they're actually trying to psyop us all out of our positions. And I can see a lot of banks, like the Bank of America said, they don't expect any interest rate cuts. I think they're all colluding together to shake out the market, and I just don't think that's true. Everything they say in public, that's not true. That's not what is actually going to happen, in my opinion. They need to cut interest rates. Otherwise, if they don't, the debt burden gets even worse and you have a higher interest rate to pay, which just means more stimulus required later on. So either way, I just think they're stuck and everyone knows it. And everyone knows they're stuck and everyone knows the fiat system is insolvent. We go through these cycles and that's how they keep us in, right? Because they go through these cycles of kind of boom and bust, keeping us focused on the short term. And I just think, no, I'm not playing your game. I'm calling your bluff. I'm in Bitcoin and I think you cut way more than 25 basis points. And I think the market, now that it's pricing in 25, if it goes to 50, 75 basis points, right, that's actually, a softening from where the market is pricing. And that means asset prices go higher. So I think that's good. The third thing on macro here is that we're going through a geopolitical change, right? New administration in the States, and the dollar is strong. And I think that's what they want right now. But the reality is everyone wants a weaker dollar, right? China want to stimulate way more. They need a weaker dollar so that they can weaken and print money without weakening their currency too much. So they need a weaker dollar so that they can stimulate. Europe needs to stimulate. There's no growth, right? Look at the UK. Europe is very, very low growth. So they need to stimulate. They need dollar weakness as well. And then the US really wants a weaker dollar because that means they can bring a little bit of manufacturing back, whatever they want to do. Maybe they export a little bit more and sort out their trade deficit. Everyone wants a weaker dollar. But if you're the States and you're Trump, you want to strengthen the dollar first. So you're in a position of strength because everyone's got debt valued in dollars. So you strengthen it, call them out, and then you go negotiate and say, well, a few trade deals here and there, we can weaken the dollar, we can do some swap lines, we can increase liquidity. And why that's important for risk assets is because this is the foreign direct investment position in blue here. And so basically what this means is dollars printed, sent throughout the world for goods and services, those dollar surpluses recycled back into risk assets, US dollar denominated assets, right? And so they all do well if that happens. So weaker dollar, more liquidity, that's pumped back into markets. So for right now, we're in a negotiating phase, which is fine. But I think for the rest of the year, once that's done, everyone wants a weaker dollar. And so I think it happens. And I think that's good for risk assets. Then finally, on specific crypto stuff, we have a crypto czar, right? This is insanely good. Sachs and members of the Trump transition team have been working closely with crypto leaders to finalize a legislative strategy. That is good. Clarity, banks bringing this on, making everything really, really like top end. This is what we want for crypto. And it just increases the amount of money that can flow in. Trump is expected to issue an executive order on the first day of his presidency that may address issues, including debanking and the repeal of the controversial crypto accounting policy requiring banks holding digital assets to count them as liabilities on the bank's balance sheet, according to a person involved with the conversations. The Trump team has made it very clear that this is a priority. Everything looks great for crypto this year, so I'm super bullish. Look at this. This is 2025 ahead of us. So, I just don't think it's over. I think we're going to do pretty well this year. If you haven't got a Bybit account yet, $30,000 as a deposit when it's down below. You can get anything depending on what you deposit. If you can't trade on Bybit, this is their DEX as well. Permanent fee discount on Apex. Really good connect your wallet trade, just like a centralized exchange. Link below as well for that one. I'm James, Money ZG. Cheers for watching, and I'll see you in the next one.